With us to help weigh the good, the bad, and the ugly of today's markets, Andrew Keene is an independent trader at the Chicago Board Options Exchange and in Philadelphia. Joe Battipaglia is the market strategist at Stifel Nicolaus. Joe has been following the markets for more than 3 decades. Joe, let me ask you sort of the question of, the question of the week. What do you make of rising bond yields? Is it really that people are seeing more positively the economy here and the future of the economy, or are they just trying to unwind massive positions that they have?
Well, it may just be a supply and demand situation where they are moving into riskier asset classes and coming out of bonds, lifting yields. There's some concern about the handoff from one Congress to the next. Will there be Build America bonds? How much counter-stimulus action will the Congress take? So for a variety of reasons, I'm not surprised you see bond yields backing up here, but not the biggest one being that we're going to see inflation or some hyper growth from here.
You know, what strikes me is I feel like there's so much enthusiasm out there. Again, everybody's raising their estimates for next year. The VIX has gone way down. I've got a viewer just writing in, an investor saying, you know, they've been heavily overweighted equities. They're starting to lighten up. All the good news is starting to be priced in. Joe, any indication on your front that you think all the good news that we've been hearing over the last couple of weeks about the outlook, about the market, is already priced in?
No, I think the big condition change going into 2011 is that the private sector continues to heal, that without government intervention and without the Federal Reserve, the private sector is actually going to demonstrate through credit demand, through recovery and output, and of course continued profitability, that it is coming out of this negative cycle in a better condition. Not hyper growth, certainly, but much better than what we've seen, and that could well carry equity prices in the new year.
Andrew, you agree? Do you buy into that?
Yeah, I mean, I agree. I obviously don't look at stuff as long as he might, but, you know, I look at stuff in shorter term. I think we're going to rally through the end of the year. Obviously, the economic data has been really good. We have a lot of economic data tomorrow, jobless claims, Philly Fed, so I'm looking forward to that information tomorrow.
Andrew, Laura pointing out maybe no surprise to see a little bit of a pullback here, in the markets after the run we've seen.
I mean, if you call this a pullback, you know, we're at 9 handles off the high. We are up 6 straight days. We're up 11 to 13 days. You know, we are grinding higher. I mean, we're down 6 or 7 points today. I'm not really concerned. I think the data tomorrow is going to be really good. We don't have much on Friday. We have a shortened week next week. We have a holiday. So, you know, I think we continue to grind through the end of the year.
Hey, Andrew, it's Dominic here. One of those things, those technical levels that we keep on talking about, this idea of pre-Lehman levels in the S&P 500. How important are those levels, and are there other levels up there in that 1244, 1246 range Matt was talking about?
1251.70, right?
Right, and then it just kind of backed right off there. So what's going on? Is that a point of resistance there, and why?
I mean, yeah, it's a point of resistance. I'm looking at the March contract, so that's trading, the high of that is 1242.25. Yesterday it traded 1 tick or a quarter point higher than the high before. So, you know, it did bump up against it and then it sold off. You know, we are trading on a light volume. Our ranges in the SPX have not been as large as they've been in the past. We're seeing an 8-9 handle range intraday, and we're not getting as much volume. You know, if we go through there, which I think we all, you know, we go to the August 2008 highs, which is around 13.15, and I think we're just going to grind higher, and I think the VIX is continuing to go lower.
Hey guys, you know, we've been spending so much time today focused on these CEOs, 20 CEOs meeting with President Obama, long meeting, 4-hour meeting. We caught up with several of them, and that include the CEO of UPS, Scott Davis. He talked a little bit about the outlook for their company, specifically when it comes to hiring and some other things. Listen in.
Every 22 packages that crosses the border creates a job at UPS. So if we can double exports out of the U.S., that's going to create a lot of jobs in the U.S. By UPS.
You know, Joe, the tenor generally with these CEOs, very upbeat, a lot of positive things coming out of this meeting. How much of what's changing in Washington right now with the Obama administration, and it looks like they're buddies again with corporate America, how key is that to the outlook next year?
Well, it's a very tentative thing, Carol, because on the one hand, many of these CEOs were supporters of this administration, and I'm sure they're not entirely happy with where we are at this point. Secondarily, they've got an administration that does not want to permanently leave tax rates where they are, that are going to refight this battle over the next 2 years, does not want to cut the corporate tax rate, and quite frankly is looking to increase the regulatory framework as opposed to streamline things. So with that as a backdrop, they've got to be polite, they've got to be political. And when they talk about the prospects for growth, we should all bear in mind that the major corporations in America are not the engine of employment. It's actually small businesses, which still do not have a positive outlook. So this, to me, was more of a photo op than it was where they can have something constructive come out of it.
And you're standing on the White House lawn. You want to make probably the most optimistic statement you can if you want to get an invitation back, right? Let me ask you about
they all have big contracts with the government.
Well,
they want to keep those contracts, so I understand.
And Valerie Jarrett made the point, but also the Boeing CEO made the point. Yep, they're a big company and they, export a lot of big things, but they have a lot of smaller suppliers that feed into them. So there is somewhat of a trickle-down effect. Or, Joe, you don't buy any of that?
Well, no, of course that there is, but we're talking relatively small numbers. What I'm talking about are the tens of thousands of employers across America who have higher health care bills to pay, uncertainty still about the taxes they're going to pay, questions about whether or not the regulatory environment will go against them or for them through the administrative process of the administration as it relates to energy and other matters. So it would be a great opportunity for the president to reach down that far, but he chooses not to.
What do you think about the tax compromise that the president made? I mean, isn't it at least a step forward, a sign that he is able to compromise with Republicans?
Well, again, it's give with one hand, take away with the other. The give is, yes, we don't want tax rates to go up for Americans who earn modest amounts of money. So everybody will get an extension. However, it's up in 2 years. And by the way, I'm against it and I'm going to fight it for 2 years. What is the message? Arguably, this is comparable to saying that I'm committed to the war in Afghanistan, but next year I'm taking the troops home. We see this over and over again where the administration is not leading, but rather making a set of compromises that don't necessarily create good public policy.
Hey, guys, we got to run. Joe Battipaglia and our buddy Andrew Keene out there in Chicago. Guys, thank you so much.